right, Bubba, here we go. Look, man, this is it right here. Wow. Silver and gold on highs. Look, the old Charlie Munger picking up nickels in front of steamrollers. I made a post about that a few minutes ago. Truth is, man, this market is crazy. $93 for silver is just nuts. Talk to me, Bubba, what you got?
Well, I mean, silver is obviously going crazy. It was actually lower quite a bit this morning and now is higher once again. But I think the big story, big beat, is if you're trying to sell your physical silver, if you can sell it, if you can find a buyer for it, they're going to destroy you, and they're going to look to buy $10 to $15 under spot. Everybody is concerned what's going on. Of course, the margin rates, the ability to hedge these things now. So you're seeing that the public who's going to sell now is going to get buried over the coals here, because they're not going to get anywhere near what we would think would be fair value, especially based on what the spot price is. And this is not just one dealer. This is many dealers now taking advantage of those who think that they can get out. And, when you get markets like this, just like markets that are going down, you can't always get out. And it's those who have the willpower and the strength to hold on.
Yeah, and you got to ask the question. I mean, like when I always know when to buy and I always know when to sell because I watch commercials, right? I mean, those commercials go on CNBC, bam, it's time to get out of the gold. Oh, buy my gold, buy my. Well, that's because they want out. The difference is now the prices run so high, they're all happy, but they really can't get out of their own physical stuff. Is that right?
That's correct. They can't find the buyers. There's a lot of fear among those that are holding now because, listen, we're at $93 for silver now. I mean, just 6 months ago, we were at 50. Okay. Right. I mean, this move mimics a little bit of what happened in 2008 when we went to 50 for the first time.
Yeah.
And it was crazy and you couldn't get out of it. Well, now you're in that same position again. And if you're somebody who wants to be a seller of physical metals, you're going to get taken advantage of because those who have the money to buy it are going to basically steal it from you, because at the end of the day, there is no market for it right now. We've gotten to a point where it's gotten so crazy. This kind of goes back to the Hunt brothers in the 70s when they tried to corner the silver market. And of course, in the 70s, they had an out. The Board of Trade offered them an out. They offered them $10 million to walk away. And what did the Hunt brothers say? They said, no, screw you. So what did the Board of Trade do? Okay, liquidation only. And that's, of course, what we're in right now. You have a very interesting dynamic here in this physical market that people can't get out if they want to get out. And if they want to get out, they're going to have to really take it and sell it like it was, 4 months ago.
Yeah. And, it's so interesting when I hear it from retail traders. Why'd they raise the margins? Why'd they raise the initial margin and maintenance margins? Well, that's how they regulate the markets. This is nothing new. The only thing different is you're just new to this market. And that's how it works, right? I mean, the mechanics of this market are very interesting because the volatility is so high right now. You don't see that happening in the corn market. You don't see it happening in other futures markets. And it's happening here because of the nuttiness, right? And when I look at, so talk to me, what is it about silver now? Look, at $19 an ounce, I was happy to buy silver. I was, as you know, I was accumulating the hell out of it. But what is it so exciting at $93 and everybody's got to have it? Is it going to 100? I mean, what's going on here, Bubba?
It's probably going over 100. It's probably going higher. But right now, we're in the FOMO market, Steve. We're in the market that everybody's got to have it. They got to chase it. They're getting told to buy it. And you're seeing that with gold. Listen, look what happened with platinum as well. The metals are going crazy because, listen, we know that debt is too high. We know that inflation is too high. And where do people go? They go to metals. So people are looking for what they think is a safety play, a safe investment. But we see these prices get so out of whack and so nuts that the margin rates do get raised. And why do margin get raised? Because they're trying to calm down the market. They're trying to let the free market trade, but they're trying to restrict, because if they let these margin rates go, silver might be 120. I mean, in Singapore, I think silver hit 105 last night. So at the end of the day, you've got an all-on panic to get into this market. And of course, you and I both know, Big Beat, that when they do that, that's normally the beginning of the end. Now, again, we may go to 100 first, but at some point here, you're going to see a pretty hard hit to the silver markets. It's, you mentioned it in the headlines. Remember when they put up all the gold stores back? and they were all over the place. And now all the gold stores are gone. It's going to be the same thing here in the market. There's going to be a pullback. Now, again, where's it going to come from? I have no idea. I'm not going to try to guess. For now, silver's going higher, gold's going higher, and at some point, cooler heads will prevail, and the money will run out, and the chasing will be done, and there'll be a lot of people sitting at the top of the market with a lot of goods and have nobody to sell it to. It's the same thing that happens on a short squeeze from the bottom. Everybody's short. The markets aren't going down anymore. Who's going to take me out? And that's the same thing we're going to see here in the silver market.
So what do you say to those people who have physical gold and physical silver when they're starting to go, ooh, I want to dump it now. Are they going to be able to do it?
I don't think so. I mean, they will. Yes. Let me put it this way. There'll be a price that somebody's going to pay. But if you think that you're going to walk in and let's say spot is 89, if you think you're getting anywhere near spot, you are not going to get near spot. You'll be lucky today if you took your physical silver into a dealer. You'd be lucky to get $79 today. Okay. Yeah. Yes, the board's trading at 93. Spot may be 89. But if you want to sell it today, you'd be lucky if you can get 79. And that's if you can find someone to take you out and pay you. Yeah,
and I mean, where would you even go at this point? Is you got to go down the local pawn shop to go get that done?
You know, or there's dealers. I mean, I'm actually meeting with a dealer here in Vegas today, just because I got a buddy of mine who's in the business and he needed some help. So I'm gonna go see what's going on exactly in this market. But I already have some of the intel and some of the details, and I already know that they're well under spot. And of course, most small dealers that you'll see, you know, the local pawn shop, the local coin dealer, they've got a buyer behind that already. So they've already got a price, and all they're trying to do is scalp out $1, $2, $3, and they're going to move on. And they're having trouble getting buyers to come to them because the big guys who have the most of it are getting a little bit nervous now as well, which again, hence the higher margins, the higher overnight carry, all the things that go along with it.
Yeah, and you're in Vegas, so that, you know, gold is silver's everywhere. You know, there's a pawn shop in every corner going as grandma's coins and mama's jewelry is going out the door so they can go gamble with it, right? And when they can't find buyers for their grandma's gold, that's a problem.
Right. And that will be eventually, this will be where silver will take a pause. Again, I'm very bullish silver longer term, but I do believe it's overly extended in here. Right.
And as we talk about that, we're about to hit $93 an ounce again, 92.88 now on spot. What is pushing this up? And I mean, I get the retail has and FOMO, and I get all that, the nonsense. But what's really pushing the nonsense here?
Well, I mean, listen, it is, you know, silver is now being used much more industrial, even more than before. So there is a bigger demand for silver. You've got the central banks playing in the silver game now as well. You've got a lot of the rumors coming out of China of how much silver they're accumulating. So you're in irrational exuberance, to quote Alan Greenspan, who I hate to quote, but irrational exuberance. You're in the part of the market now where time and price mean nothing. I gotta own it. I gotta get it, and I want it now. And I don't care what I pay for it. That's the kind of market we're in right now. You've seen it all day today. This morning, silver was down quite a bit. Bang, here we are chasing up to the highs once again. I got to have it. I got to have it now. I can't wait for it anymore. And I'm willing to pay whatever price.
Yeah, let me ask this question. I mean, like for me, the market I see is that it's oversized positions and quick, right? That's what I've been doing. I've been taking advantage of this. If something falls off heavy, I buy, oversize it, take 3 or 4 pennies or $3 or $4 out of it. See you later. Vice versa. Something goes up really fast, I do the same thing. Is that the market that we're in, or is there something different that I need to be looking at here?
No, I think that's exactly the market. When you right now, for a guy like you, a guy like me, you want to take advantage of the obnoxious movement. You're taking advantage of the emotions of other participants in the market, because as you and I know, there is not a lot of rationality when it comes to prices getting crazy. We've seen that happen. You go back to the internet bubble. We saw it happen with the houses in 08. We see it now in many of the AI stocks that are way overpriced. Again, you get to a market that loses all rationality. People get crazy. They got to buy it. They got to own it. They got to have it. And
but you say that, but Larry Fink today, BlackRock CEO said there's no bubble, no way, Jose, in AI stocks. Is that right or wrong?
Well, I think he's wrong. But, you know, again, Larry Fink and me are different. Larry Fink can hold something forever. You know, everybody compares, and I'm going to go back to 08 and Goldman Sachs and Warren Buffett. He was a big supporter of Goldman Sachs. He bought a lot of stock at like 100, 110, but he had preferential treatment and he got paid interest for helping them out. So he didn't get nervous when Goldman Sachs went down to $10. He didn't have to get nervous because he was somewhat protected. Everybody claims what a genius he is to do that, but he was already preset and knew that he had an exit should there be a catastrophe. So if I'm Larry Fink, I'm not worried because I know that these markets are going to come back. Even if they sell off sharply, Larry Fink's not going to get hurt. They're not going to get hurt, okay? They'll have a little bit of loss, but they're not going to get hurt, and they'll come back and they'll hold it because they're not the normal person that whole retirement is tied up to the market, to that stock. You take an individual who's got, let's say, $100,000 worth of NVIDIA, and they cut that in half, that individual is going to be puking it out and getting rid of it. And that's the difference between BlackRock and their ability to hold, Warren Buffett and his ability to hold versus the average trader.
Yeah, let's talk about it. I mean, and I think a lot of this has to do with the fact of the geopolitical issues around it, right? Ukraine, obviously, Taiwan and China, obviously, Iran, Iraq, Israel. I mean, there's Greenland, believe it or not, Colombia, Venezuela, Cuba, Brazil.
It ain't good.
It ain't good, bro. So talk to me. What do I need to think about?
This is something that I talked about a couple of years ago, and I think it's still in play. The dollar, the fiat currency system, you may or may not agree with me, but I think it's the biggest garbage manipulated system that there is. I think the central banks take advantage of it. I think it gives them a way to create more debt and make your dollars worth less. I believe that there's a world and a time that you might need physical metals to purchase groceries again. I think this whole currency market could blow up because I think that they're creating so much overall debt. And well, again, I'm not saying I'm right.
I'm not going to agree with you on that. The problem with silver and gold as an actual currency, I'm not going to my local Walmart with a silver coin in my pocket.
You might. That's the point. You might.
If that happens, my God, the outside the world's done, right? I mean, come on.
I'm not saying the world's done, but look, the currency system, the amount of money that you have to make just to live today, okay, that is created by the Federal Reserve and by the central banks around the globe. Does you agree with that or not?
Yeah, of course.
Okay. So we know the fiat currency system is no good. If there is some devaluation,
you just jump from let's make currency fiat from.
I don't want to make fiat. I think fiat is a bad system.
Okay. So then crypto because we got to have something that makes transactions easy. I can't walk into my Amazon account and go, here's my silver coin.
Oh, I agree. I'm not saying I'm not saying it's going to be easy, but I'm saying, I've lived through 87, the 90s, and 08. Okay. I've played through all three of those. And
all three of those used cash to get out of it. And it was derived, all three of those were derived, right? They were weapons, as Buffett said, weapons of mass destruction, the derivatives, right?
So there's always a chance that, listen, there may be some vendors that may say, your local store, your local small store may say, I'm not taking dollars anymore. And again, I'm not saying it's going to happen. I'm saying that the possibility exists, and that also adds value to cryptocurrency. It adds value to physical metals. Okay. Again, I'm not saying the world's coming to an end, and nor would I insinuate that. But I think there's a lot of problems out there, which has helped perpetuating the value and the rise and the chase to these metals. You mentioned yourself, there's not a spot in this world right now that there isn't some unrest and some problem.
Right. But is that the end of? I mean, does that kill fiat? I don't think it kills fiat, though. It never
kills fiat until you kill the central banks, and we're not killing the central banks, unfortunately. I mean,
well, I don't know. Maybe we are. I mean, Trump. The way Trump
I hope so.
The way Trump talks about Powell, you would think that he's committed like 9 kinds of sins out there.
Well, again, we talked about this Tuesday. Look, I don't like what's going on there, but again, I'm a big anti-Fed guy. Okay, because again, they are supposed to be a completely independent organization, and they are not. Okay. Interest rates are supposed to be determined by a free market. They are not. So the central banks, the federal banking system is nonsense. It is not a free market. Whereas the world you like a lot, the cryptocurrency world, is truly a free market because it trades 24 hours a day, 7 days a week, and nobody come in and say that we're going to make this worth less.
That's
it
right.
Trades on buyers and sellers, which is the way all markets should function. Not on whether the Federal Reserve cuts rates or not, because the Federal Reserve is in my opinion, again, I'm not putting words in your mouth. In my opinion, the Fed is nothing more than the big con shell game.
Yeah, and we have a comment right now coming in now from Dan Dulac. Says there are stores already that do not accept cash, only credit and debit cards. What do you say to that, Bubba?
I think that's another thing that we have going, right? That they want other forms of payment because then they can turn that form into whatever they want. I've seen that. Listen, I've been to stores. I've had to walk out because I don't have the app on my phone to be able to pay for things. Okay.
And vice versa, me not having cash when I went to
I'm old. I'm an old guy, so I'm from carry cash in my pocket. I don't want to believe all this.
I mean, the thing only says "In God We Trust." Look, I'm a Christian, but I mean, I don't.
Yeah, but it used to say certificate. Now they say notes, which means that all it is another debt.
Another debt. It also says to pay all debts.
Okay.
All right. Let's get off of that. Let's get off.
Let's put it as for kindling wood. Go ahead.
I love this. All right. As a former White House employee, State Department, I always believe in one thing, and that's diplomacy on a good way. But lately, it's been diplomacy by what we call the Fifth Fleet. It looks like the Abraham Lincoln, the Reagan, they're all moving around the world. And the Ford and Truman are all moving around and moving into hot spots around the world. Are we in the first throes of World War III?
Potentially. The next war, I think the next war could be the last war, which is unfortunate, which is a problem, right? I mean, with a lot of nuclear weapons out there, this is obviously a very scary situation. The threat is there, okay? But I believe that at some point, hopefully, the leaders of the world will have cooler heads and figure out a way to avoid that. Because again, we know that this is like AI of work and things of replacing employees. The technology in bombs and chemical warfare and other things could be the destruction of the world. So I don't think we're getting to World War III. I think there'll be some skirmishes. I think there'll be some threats and some issues. But I think at the end, I think that people realize that this is like the game of tic-tac-toe, that if you drop the bomb or if you go crazy, there's no winner.
Yeah, and I'm going to take it back about 150 years. Little thing called Seward's Folly. That was Senator Seward wanted to buy a little parcel of land off the coast of Canada, attached to Canada today, called Alaska. That's on our western border, as we know, next to Russia. On the eastern border, we don't really have a lot. We have this big ocean called the Atlantic. In between there, it's a little area called Greenland. The president decided that, I guess, no longer little Marco. He's now Marco Rubio's Secretary of State. Is being sent to Greenland to talk to Denmark and talk to a lot of those countries in NATO and offer $700 billion for the country. I think it's a steal, but talk to me a little bit about why we're there and what we're doing, and is this going to happen?
Well, I don't know if it's going to happen. I'd like to see it happen, actually, because I think that is a line of defense for us. I think there is a lot of minerals, a lot of natural goods up there that would be very beneficial to the United States. So I think that I think it's a good idea. I don't know that it's good at the way they're trying to approach it, the way he talks about it, but I do think it's a good idea. And certainly we would want to defend and have a first line of defense on all sides of our border. And I think that would be an outstanding parcel for us, the United States, to annex as part of the United States of America.
And yet Denmark sent more troops. Germany's on their way to sending troops to NATO to send to Greenland. Look, we know there's only about 30,000 people who live on the hot spot, as we call it now, although it is cold. Why? I heard from Peter Thomas that it's lava tubes. I've heard that it is security. I've heard that it's you said first line of defense with Russia. Why do we need a first line defense, and why we got to have it all the way up there?
Well, I mean, it is kind of on passage to here. And I think that, look, it depends on what your take is on, is there threat of war? Is there problems? I'm from the school that the United States, in my opinion, could be freestanding without anybody. Okay. We don't need the rest of the world. The rest of the world needs us more than we need them. But I think that we also have to be able to defend ourselves. I think that over the last 30, 40 years, we've become much weaker through a lot of things that we do. And I think that we need to rebuild and regain the overall power over the rest of the world, because we are the leader and we are the power. And I think that the world operates best when the United States is strong.
Yeah, I agree. Speak softly and carry a big stick. But it seems like our stick's getting bigger and bigger, and our mouths are getting louder and louder. So
the louder and louder is right. The
louder
stick
and louder.
Isn't getting any bigger, but we need to take care of business at home. Big B, again.
What does that mean though, Bubba? I mean, what does business at home mean? I mean, for me, business at home means taking care of poor people. Business at home means, we got mouths to feed here.
I agree. Listen, I'm quite frankly tired of sending our money everywhere but here. Okay. Yeah. We have a lot of poor people here that need to be taken care of. We have a lot of veterans here that can't get taken care of. Yeah. I'm for taking care of America first. Okay. The problem is our political system does not look at it the same way, because there's too much graft going on around the globe and too many benefits for those who are in office. I don't care if you're a Republican or if you're a Democrat.
All right, I'm gonna do this to you, Bubba, and I'm gonna do this to Jim Iorio. Coming in now, I hope you guys like each other. If you don't, if that's okay too, I don't care. I'm gonna bring him in anyway. I love this. This is good stuff.
Not only do we like each other, I've missed Todd. I haven't seen him in years. He's my guy. How are you, Todd?
What's up, brother? How are you? I said that Steve's got to go out to the restaurant. He's too lazy to go out there when he's in Chicago.
Wait, you've been to my restaurant before?
Yes.
Yeah. Have I seen you? You and I had drinks there or not? Or
yes.
Not? Okay, good. I'm glad. Right. Again,
obviously you guys had drinks. You don't remember. That's good. I like that.
I remember. Jim's older than I am. He doesn't remember as well.
I am. I'm older than everybody.
Okay. Yeah, I was there. Palatine, Quentin Road, baby.
You bet. Oh, yeah. I remember now. Yeah, that's awesome. Yeah.
I was on the first one to sit in the outside, the new outside you had there.
Yes. Steven's going crazy. He didn't know.
Oh, no, I love this. Just have fun, man. That's why I built this machine, right? And look, the numbers are proving it. The people are watching, right? Good. Look, Jim, you coming in on this. Bubba says that we should get rid of the fiat currency in the world and go right and just blow up the Federal Reserves everywhere and get back to selling nickels and quarters and gold and silver.
Well, the Fed is a failed experiment. I think that if the three of us decided to be like a Fed that could be algorithmically based, and we'll just go on a 10 or 20 sets of criteria that we determine ahead of time, we'd do a far better job than adding the human element into it. I think that, again, it is a private institution that creates currency. It is a private institution that has enriched themselves at the expense of others. Yeah, of course it's failed. The rest of the world, I don't give a crap about. We definitely should not have a Fed. I think theoretically, a Fed could be a great idea, but they use the fact that theoretically it could be a good idea to get that stupid bill passed in 1913. And now all of a sudden we lose our purchasing power. And again, I will remind people too, that the Fed, when faced with the fact that the federal government, 5 different states, counties, cities across the country were completely indebted where they couldn't get out of it, their decision was to spur massive inflation, to take money out of our pockets and your pockets of the people who are watching, so those government entities could monetize their debt and pay back in cheaper dollars. They told us they were doing it. I'm not saying anything radical. Todd, do you like my response or no?
I love your response. I have a question for you. Do you believe that Woodrow Wilson was in on the scam, or was it just the Rothschilds, Warburg, the Rockefellers, and J.P. Morgan?
Not only do I believe that he was probably not on the scam, because if he's a United States president, he's probably a conniver but stupid at the same time, which most of them are. But I will say that the wreck of the Titanic needs to be looked at very, very closely, because on that ship were 3 of the biggest opponents of the Fed in Astor, Guggenheim, and Isidore Strauss. The 3 biggest opponents of the creation of the Federal Reserve were all killed in the Titanic, and then the bill passed 6 months later. People, I'm just saying the facts. People are watching here. Yes, I have a tinfoil hat, but
I was going to say, I'm looking for aluminum foil around my head.
I have one more question for you.
Sure.
And I know you because you traded on the floor. We traded on the floor together.
Yeah.
Okay? Don't you believe that we don't need a Fed, that the interest rate market and interest rate should be determined by the free market, by supply and demand, by what everybody else wants?
I think
is that not correct?
that is the most obvious yes of any question I could answer. And anytime they get involved, it's literally a disruption and dislocation of the market. They're interfering with normal market process. And we've seen how bad that can be. Like in 2008, that whole blow up bullshit was based on 2 decades of bad Fed policy, of bad government policy. Just let markets do their thing. And guess what's going to happen occasionally? A recession. A recession is going to happen, and it's not going to blow up for the most part.
And it's all the fault of the original bubble builder, Alan Greenspan.
Exactly. Yes.
Welcome to Conspiracy Theory 101 show.
Conspiracy theory. I think these are facts. I don't know about the Titanic.
I'll add one more thing about the Titanic. JP Morgan, the biggest proponent of the Fed, was booked on the Titanic and canceled last minute. And I will be done talking about the Titanic.
There you go. Look, we're not conspiracy theories. We're talking facts here. This part is factual. The Federal Reserve is not private. It's supposed to be, and it's owned by the frickin' banks.
Yeah.
Okay. What is it? What are they going to do for you?
It's ridiculous.
And you and I talked about this, and Jim knows this. The 10-year notes, the first day they cut rates were 3.99. They're 4.2 today. Yeah. They cut twice, yet the 10 years are going higher. There's a fair market for you.
Yeah.
That didn't be a lot of damn good.
And the housing market seems to be fairly crushing again, getting destroyed again, right?
It looks that way.
A lot of different places, housing, a lot more housing is coming in line. I just was going over real estate in South Florida, and the only 2 places in the Keys where it's not falling apart, Stephen, is Key West and Marathon. But everywhere else, there's a lot more being added to inventory. But yeah, the 10-year, to your point, Todd, is that I think the 10-year is telling us 1 of 2 things: is that there shouldn't be cutting rates, and that's why so inflation is still 2.7, it's not 2, and the fact that the federal government is spending money still like drunken sailors and has a lot of bonds to sell. But the reason we're not at 4.8 is because I think they know the Fed, circling back to our friend the Fed, they're standing at the ready to buy bonds as soon as rates start to get out of control on the long end.
And they did buy yesterday, right?
Well, they bought. Yeah, they're buying short end.
And so there's your conspiracy, covered with fact.
Right. Yes.
I love you guys.
He's going, I'm never having these 2 on again.
No, I love it. I mean, look, I'm an Illinois boy too. I get it. I mean, I understand it.
But we're not speaking out of turn. We are talking about facts.
Yeah.
Okay. They don't let the free market trade in the interest rate market. That's fact.
No,
it's not fiction.
And that is a scary thing.
They make their rates so the banks can make more money. What other business can you go in and make billions of dollars? Okay. And if you go out of business, the American taxpayer will bail you out.
Right.
The Fed will come to the rescue, which is not the Fed, it's us.
That's true.
I mean, what kind of bullshit?
And by the way, for the people watching too, our ranting here is non-denominational ranting because Republicans do make mistakes too. The fact that we now currently buy corporate-backed bonds. I mean, is that the Fed buying them? Or somebody's buying corporate backs. I remember when the story broke a few years back. That's literally the definition of socialism. The fact that the government owns 10% of Intel, the fact that the government is now taking over the Defense Department, all of it is just too much intrusion. Corporatism is making for imbalanced markets, and it's going to create problems.
So last week, I was at the CMT Association, and Tyler Wood, the head of that, asked us all to move around desks and and we're talking about the top level people, chartists around the world. To ask one question. I'm going to ask both of you. We'll start with Jim. You can answer it first. What is the thing right now? There's so many things going on in the world. What is the one thing that's scaring you the most in the markets?
So I would say it's shifted over the last 2 weeks to being more of geopolitical. Remember in 2025, as we were closing the book on 2025, the thesis is that 2025 was going to be the bad geopolitical year because of trade disputes, okay? And that we were going to go bluer skies into 2026. Now, all of a sudden, we get to 2026, and there is little things erupting. And by the way, my response to that is always the same. Add more gold and silver, which, by the way, I didn't do just because I have gold and silver up to the eyeballs. I've actually been getting out of a little bit over the last couple of weeks. But that, to me, is scaring me a little bit. The labor market scares me, too. I think that in the medium and long term, AI will be a benefit to everybody, but it's not that unusual for in the short term for a new technology to disrupt the labor market, which I believe that it is doing in the short term. And by the way, I don't even think it's necessarily AI itself. I think it is over-enthusiastic predictions of what AI can do for a company, and they're slowing down hiring to see what AI can do. I think they may ultimately be disappointed, but the labor market scares me a little bit too.
Yeah, and Todd just said a few minutes ago before he came on that the bigger owners of silver and gold, the institutions are having trouble selling it, and especially on physical, there's people that are owning it are having trouble dumping it. Are you worried about that too as well?
Could be. Well, that's why, again, when I saw the parabolic move, I mean, we all know, like, I believe the fundamental case for gold and silver is still strong, but that doesn't mean everything is equal as it was a month ago. The price has changed and the positioning has changed. So
Right.
That's one of the reasons I got out of 25% of both my positions in gold and silver, and maybe we'll get out a little bit more because stories like that do scare me. We all have seen charts like this before. The silver chart, like when I look at it now, I literally get terrified because I get scared of heights. It's shot up through the roof, and we all know that things that go up parabolically can come down parabolically. So I am prepared for that.
All right, Bubba, what scares you the most besides lions and tigers and bears?
Oh my. Actually, I'm in a big agreement with Jim to a certain point. I think that jobs are a problem. I think the employment market is going to get a lot worse. I told you the other day, there's 100 companies already talking about layoffs for 2026. We saw some pretty dramatic layoffs at the end of 2025. It's not getting any better because they are going to replace these jobs with AI until they figure out, and maybe they'll be disappointed, maybe they'll not. But whatever they are, disappointed or not disappointed, those people don't have jobs, which is going to lead us right up the lane of universal basic income, which is not good because the government already has too much debt. The taxpayers have still too much of a burden. And I think that the housing market is starting to melt down, not everywhere, but even here in Las Vegas. I can go out now, even though standard mortgage rates are, let's say, 6.5%, the builders are offering 3.5% because they're stuck with inventory. So I think all of those problems together, plus the high inflation, and I don't think it's 2.7. I think it's higher than 2.7. But the high inflation, the lack of cooperation, the geopolitical events, and no jobs is going to create.
And yet, yesterday Elon Musk said that no need to save your money, no need to invest because 10, 20 years ago, everybody will be on UBI and there's no reason to save money.
God, I love that guy and I hate that guy all at the same time. He's done so much good things, but that is a terrible take. And by the way, the next generation always talks about some work-life balance nonsense. That projects it as somehow there's life without work. There's not life without productive employment.
Yeah, it's nice for him to say as the richest man in the world to say that, right?
Yeah, exactly.
Well,
this whole thing is nonsense.
For that. But let's face it, most people, us on this call for sure, we're not the guys that are going to sit home and want to get universal basic income. We're going to want to make more. Universal, right or wrong. I mean, a big majority, the lazy people that don't want to work anyways, are either on welfare or unemployment now anyways.
Yep.
Those are the ones. But the real people that really want to work, they're out working. They're looking for better ways. And unfortunately, a lot of things that are happening are preventing the average guy to go out and build something and make a better way for himself.
And he doesn't. A lot of people don't know that. A lot of people think they don't want to work. And again, when I remember, what was that day we had in October that we had off of the exchanges, but the kids had school, my wife had school, and it was just a late October day that I had nothing to do. I hated that day. I don't like day. It was Veterans Day, and I hate days where I don't have anything to do. I like to work. I get up looking forward to working. And if people think that they don't want to, that's a normal thought. It's just wrong.
We all three on this call could quit working and retire.
I don't know.
Where am I going to go? I'm going to die. Maybe I'll die in private market.
I'd be in a drunk tank.
I'm going to drop right down.
We'll be on the same boat drinking and fishing. Okay, I'm okay with that. No, look, look, you're right. I mean, look, the three of us, we'll be busting our hind ends trying to make more money, but not in a way like that, but that we'd be bored as hell. I've retired 5 times now. Doesn't work out for either one of us, right? Look, I think that, and I'll leave it at this, guys, for the three of us. And I love this conversation. I wish I wasn't able to at a meeting. But when you're looking at the future right now, where we're sitting right now, positive or negative going into this? Are you more positive about the future, or are you more negative at the future?
I'll say that I'm more positive than I was 2 years ago, but I'm still kind of negative. I think that we can continue from a fiscal and financial standpoint. I think you continue on the path until the bond market flexes his muscles and tells you that you can't any longer. I think we're spending too much money, and I think we're coming progressively nearer to that point in time. And that sounds benign to people who don't know what it means, but it can mean a really, really stark change in the way of life in a country when the bond market forces austerity on you, or you have a currency crisis. And so I'm negative, but not as negative as I was, if that makes sense.
And I'm negative with the overwhelming debt, the new tax requirements that we're going to have, no matter what anybody says, all the stuff that's adding up. does not add up to a good sign. It adds up to some very, very tough times. And unfortunately, when you're in a K-shaped economy and you get tough times, we won't get hurt as much because we're okay. But down the stream, I think there's a lot of heartache out there and a lot of problem. And I think it's not good. And I don't think it's good for markets. I don't think it's good for the country. I don't think it's good for humanity.
Bingo.
And yet the market's pushing to all-time highs almost daily. So
that's part of it, though, because they know the Fed's going to continue adding liquidity, and the government has to keep spending to keep the plate spinning. Yeah,
exactly.
Apple is a capital. Called it best. He was the first to call it.
Yep.
All right, boys and girls, this has been good, man. Jim and Bubba.
Jim, nice to see you. Hamburger and some beans over at the joint. Let's go.
Yeah, please do. Love you. See you guys.